This interview is for information only and should not be considered as investment advice or a recommendation to buy shares in the company featured. Welcome to this Stock Box interview.
Well, joining us today is Edward Wyville, Corporate Development at Amaroq Minerals. Thank you very much for joining us, Edward. How are you?
Very good. Morning. All well.
Yeah, morning. Thank you for your time. It's the first time that we're speaking here. I know you've been involved with the company for a while, really from quite early days, and of course, certainly from the IPO. So, I wonder if we can perhaps just get from your point of view, what your role is really and what you like about the company and really what's been happening over the course of the last few years with the company.
God, that's quite a story. We could
we could talk a while on that. Yeah.
To really bore you. No, I joined Elder I became a shareholder actually of the company back in about 2018 when it was a company called Alapex, which was listed on the Toronto Stock Exchange. I knew Elder through our current chairman, Graham Stewart, and when we decided that we're going to come list in London, we kind of got together and I helped him through that IPO through Stifel, who helped us raise. We raised obviously £42 million in 2020, which was just after COVID, or literally, as I was saying, we were the first IPO on the London Stock Exchange since the sort of first outbreak of COVID, which was a bit of a sort of spark to the market, and probably then pushed one of the great little bull runs that we saw from that point. But obviously, gold price has gone up due to the what was happening in the world, and we successfully managed to raise that money. We'd actually been out roadshowed just before COVID, and we'd kind of had a really oversubscribed book, and then we managed to scrape the 42.5 million that we needed on, I think it was July of that year, 2020, in amongst the chaos of COVID, and then changed the name to AEX Gold at that stage. And we then, with the idea of bringing back the mine that we have now brought back into production back in 2020, and I think what happened then was sadly the moving the country's lockdown, getting people into Greenland, getting people out of Canada, everything went up, price, logistics, everything. So we pulled the rug on that. But I joined the company at that stage full time from post a career in the city in London. And we then started batting down of, okay, we need to get this mine back into production, but also there's a great opportunity here to go and start licensing up Greenland when it was kind of off everybody else's radar, because I think there's enough metals, being come out of the ground elsewhere. I think what we realized as well from that mistake from what had happened during that thing was that if we wanted to operate in Greenland going forward, that we had to become operationally capable and build the infrastructure to be able to get and do what we want to do, not just in the exploration side of things, but also in the bringing a mine to production. There aren't stores around the corner in Greenland. You've got to be the master of your own destiny. And I think that was the lesson we very much learned that year, and built subsequently over the next few years, built that structure, which has enabled us to then, build this processing plant and get this mine into production. So sure. The building blocks were very much, by luck or by chance or,
sure.
Whatever, but a bad luck actually, taught us a very good lesson there, which we learned hard.
Indeed, yeah. So, but you've established yourself very much on the ground with operations there. So you brought the existing gold mine back into production, and you made your first gold pour fairly recently as well, I think.
We did, yeah. Just to keep everything, in its right order. So we did a first pour, but we're doing a 2-phase build of the processing plant. Phase 1 is underway. So we poured our first gold, but we won't be in what's called full steady state production probably till the end of this year.
Okay.
Giving ourselves a good 12 months to ramp up. We're still in the middle of commissioning or building all the foundations of phase 2, which essentially is the flotation. So at the beginning, we're getting the gold from a simple, crushing, grinding,
Okay.
and gravity circuit. So that's where we got our first gold from, and that is happening right now. And with the idea that should give us sort of 70% roughly of recovery there. And then the idea is to add the flotation, then get up to sort of 90 plus recovery by the end of this year at a full run rate of 300 tons a day, which is what the mine is commissioned to do.
Okay, so 300 tons of of ore per day. I mean, what's your prediction in terms of sort of gold recoveries? Well, I don't know how you do it, on a monthly basis or quarterly.
Yeah, we'll update the market quarterly. We've set we think pretty conservative targets, to do it. At the end of the day, you can't really run a mill. If it's a 300 ton a day mill, you have to run 300 tons a day. So if you're only mining, say 150,
sure,
you'll only process for half the month. If you see what I mean, you're mining every day. So obviously the idea of the mine then starts balancing alongside the processing plant. So we are, just getting our mining underway. It's midwinter, so we got to, but it seems to be going okay, and the processing plant is being, as I say, in the commissioning phase, and hopefully as the weather eases and and we get better, the mining teams get better at mining. We've been mining for probably, well, I say mining. Some of that mining is building the tunnels, and some of that mining is mining ore. So putting in the infrastructure and producing ore for about 6 months now. So, the teams that we have are getting better at it, getting more day. So again, that is something we're also going long thing. So you've got your mining and they're two separate sort of businesses. Once the ore's out of the mountain, it's then in the processing plant, and that's your thing. So you have to try to get to that point where you are doing your 300 tons a day from the mine, and then you're processing your 300 tons a day, and then you're in full steady state. So that's going on. Recovery rates. The one good thing about this mine is it was a past producer, so we understand the rock very well because it's produced in the past. It produced plus 90% in the past, and we don't think that the circuit that they were using was the best and most suitable circuit for this type of ore. So we're confident that we'll get that and hopefully there. So that's a big benefit of understanding not just the rock integrity within the mine and how you can mine, but also the ore that comes out and how you can process it, what grain you need to grind it down to, et cetera, et cetera.
So is that sort of still being worked on then? Because you've explained there that you're in phase 1 where you're getting 70% recoveries, moving into phase 2 later in the year in the flotation phase, expecting sort of 90% recoveries there. In terms of that's obviously good in terms of you're building up operations, moving into production there. In terms of the scope of the project, do you have an idea at the moment of the resource and the grade, etc., and what that could mean economically?
Yeah, so we have a rubber stamped great resource there of 320,000 ounces.
Okay.
That hasn't been updated for a year or two.
Okay.
And we're expecting an MRE update. It'd be nice to get an upgrade. Hopefully we will. In the next quarter. So this it may be a bit longer, but we're pretty sure it's going to be this quarter.
Okay.
That will think that the grade in the mine is very, very high. It's 28 grams a ton, which is globally is right there in the top percent. Your mining grade is not that, because obviously the way that the gold is held in the mountain is held within a quartz vein, white quartz vein, and then you have your black rock on the outside, which is an amphibolite. The gold's not really contained in that, although you do get a bit of margin between that. And obviously you blast the white rock out, you get a bit of the sidewall. So you get what's called a diluted mining grade, which is basically your white grade plus your thing. So we expect that to be in the mid-teens by the time you're doing. Again, the mine in the past ran at, I think the average grade was 15 grams a ton. So that's a very good indicator for our mining. We hope we can in the future mine better than they did. And I think the infrastructure that we're putting in will hopefully give us the ability to do that, of being able to underground drill, just knowing the resource, very well. So we hope to have an upgrade on that. But yeah, that gives us, will hopefully obviously give us more ounces and a longer mine life.
Indeed. And will that feed into studies, PFSs, DFSs? Are they being worked on?
Well, not really, because we're funded. So
okay.
We've been through about 3 different fundings over the last 2 years. Last one was just before Christmas. We're very successful. We went out to raise 20 million. We got offered a lot more than that. Ended up taking 27.5 million.
Okay.
It was very oversubscribed, which is amazing, and that gave us everything we need to do it, and debt free as well, which is really important, because a lot of mines, when they go into production, have an enormous debt facility, hence the fact that you do a bankable feasibility study, and then you end up paying back the bank for the first few years. So we're very lucky is that when the gold that we will produce, we have a facility, by the way, of 30 million, but we're net cash over that facility, goes into our pocket or into our shareholders' pocket. So that's a great start for us as well. So doing a PFS is not necessary.
It's not necessary because you've already funded. So you effectively funded all the way through to full production.
Yeah.
Okay.
That's the point of the fundraising that we did before Christmas was to get us there. That should fund the phase 2 flotation system, get it all finished off. And then obviously we've now got, within the next month or so, we have start having some steady state of cash flow as well, because we'd start selling some gold until we get to full production, towards the year end. And then, we're in steady state. And so, then we'll be making some money.
Yeah, indeed. And it's at the point when you can sort of, well, it is good to make money, particularly given the gold. I think gold hit all-time highs yet again just earlier today. Yeah, exactly.
And we've been very lucky with that. Talk about being in the right place at the right time with the right commodity.
Sure.
That's really has helped us out. I think when we originally did our maths on the mine, few years ago, when we were looking at it back in 2020, we were sort of at 1650 gold. So 2750 today really helps.
Yeah. Okay. Good. In terms, it's a long way off from there. So in terms of sort of the value here, have you got an NPV? Do you have estimated revenues, cash flow, gross margins, life of mine, etc.?
Yeah, absolutely. We got all that, and we obviously you can read any of our analyst notes if you're on Research Tree, you can read Pamela Libram's recently. I think you and Lowe's got a 126p target price on it.
Okay.
And there's also Canaccord, who are our other broker. They've got a note which can give you all that information. I can go into the minutiae on it, but most of that value is locked up currently. It is of the mine, and then the remainder of it, I'd say probably 85-90% of the valuation is from Nalak and the mine and the gold that's produced, and the potential size of the upgrade that we hopefully do. We believe that in the Nalak Mountain, not only the main vein that we've got, over 1 million ounces there, and then there's a second vein called the 75 vein, which funny enough sits parallel 75 meters above the main vein. We believe that that's another big resource in itself. So, we'll test on that, and we'll be drilling all that, and hopefully that Amaroq will keep lifting over the next few years. And that will help on our valuation, NPV, all that sort of side of things.
Indeed. And recently you announced you were awarded an additional license here, so increasing the total land holdings to nearly 7,000 square kilometres. So this is what's the purpose behind this? You're just locking up more asset, really, more land.
Yeah, absolutely. Well, I think that we're all pretty know what's going on. Greenland's been in the papers a lot recently with the US interest. And what I think we were quite lucky with, or had a lot of forethought with actually, was that we changed our name from AX Gold to Amaroq Minerals, because we ended up buying, we believe, South Greenland, which sits on a number of different geological trends, sort of on your macro geology. When it was stuck between Canada and Scandinavia, it was all one supercontinent as it ripped apart. These geological belts sit there in South Greenland. So we thought, let's let's bank that land now. Now you can't just go around in the old days like and stick a peg in the ground. Obviously you've got to go through the hoops with the Greenlandic government to do that. And you've also once you've got that land, you've got to spend money on it. You've got to spend exploration dollar on that land. So it's like a sort of like a rent you have to pay. The rent is through the drill bit or studies or things. So, and James Gilbertson, our VP of exploration, extremely well-known geologist. He was head of exploration at SRK. And Elder being a geologist himself, and so we want to own as much of these geological trends that we can, and that sort of goes into the other side of our business. So we have, if this sort of few phases, you've got gold production at Nanolag, and you've got your gold exploration because we own the entire of the Nordic Gold Belt, where we believe another, for example, you might have seen in the news releases, we had amazing results from Nanoq license this year, which is on the east coast of England. That's the far side of the Nordic Gold Belt, and we're going to be drilling that to bits this year to hopefully get a maiden MRE on that, which would be amazing.
Okay,
we're seeing gold, all through this trade. So that's what the idea. The gold mine makes the money, which gives us then the revenue to be able to go and put the drill bit in, which is to prove up other large deposits in the area. So, and that's just one trend. And on the north of that, we have, the what we call the South Greenland Copper Belt, where we last year proved up the first, proven copper porphyry system. And that system is about 125 kilometers long. And it goes from an old copper mine, which was mined in the turn of the, 1890 to 1910 in a skarn, right the way through sort of porphyry up into an epithermal area. And Johan Dahlland, which is the land we just bought, is at the far east-hand side of that. So we now have blocked down all of that belt. So, and then throughout the middle of it, which is probably the most famous bit, is the Garda area, which is where the famous Tambries and Kavanafeld, which is probably the reason why Trump is very keen on buying Greenland, because they're one of the largest rare earth intrusions in the world, and globally known as it. We have a lot of land through there, which goes across into the east coast as well, which was our Stendalen deposit, which we're drilling for. We see it as a sort of potentially a similar Voisey's Bay style nickel copper massive sulfide kind of deposit. So we've got a lot, but you can own a lot, but you've got to do a lot. You can't just sit on it like an egg and hope that it comes right. But I think that's been a very good strategy for us to go and land bank what we feel. And, we have been up to, at one stage, 10,000 square kilometers. So we've given back, about 3,000 because, we just don't feel that land is the best chance of us finding something. So,
okay.
So that's, and by the way, that's just to make it clear, that sits in a separate JV. So we own 100% of the gold in Amaroq, and then we own 51%, and that's called the Gardak JV. And that joint venture is 49% owned by JCAM, who are a UK institution, More Capital, Lewis Bacon, who's a large US investor, and there's a number of high net worths in that thing. And they gave us £18 million 2-3 years ago to go and start drilling that. So that's been funded separately through that joint venture. And we're really excited about that. So we've got, I think we drilled 5 different targets last year. So, I mean, again, coming back to what I said to you on operational capability, that's what you've got to be good at. That's what you've got to be able to get that drill rig turning as efficiently, moving crews around, demobbing camps, as efficiently, because otherwise, that's where you save a lot of money.
Sure. So, for sure. Okay. And so in terms of then really the objectives for this year, it's all about getting that MRE out sort of quarter 2, then obviously phase 2, the flotation circuit, with the ultimate aim to get into gold production, full gold production by year end. I know as well your team seems to be building. It sounds like you're going to be sort of very busy and also not leaving Greenland anytime soon.
No, absolutely not. No, we're definitely in it for the long term. I mean, we say we spent 7 years building the infrastructure there. And I think this is the time when it gets, quite fun for us in many ways, but obviously still got a lot of pressure of getting the mine into full-time production.
Sure.
But we can now start drilling really what we want to drill. I mean, we've been gagging to drill Nanoq for years and other targets, but now we can get on with that and do that. And then we've mentioned in the past that we're sort of setting up a new arm to the company, which essentially is like our servicing. So again, this comes down to this operational capability. Is how do you service yourself in Greenland, because nobody else is going to do it for you, and how do you keep your inventory right? How do you need the drill rigs? You need the boats. You need things. So if you want to get things done out there, you got to have all that stuff, and relying on other people to provide it for you is just not possible. It's not like Newfoundland or Canada where you can drive down the road and buy a load. You can't do that here. You've got to do it. So but on the same side, there's a new airport being built very close to us. So there's a lot of infrastructure going in, and again, that's the benefit of what's going on globally with the talk about Greenland. And then also we're looking at renewable energy. We're looking at, there's a river that runs right next to the thing. It's we think we can get a nice little hydro system. We're using about 3 megs of power. If we can get 1 meg out of that or near to that, then that's obviously great. Everything is on diesel. If we can get off diesel, that'd be great. But you've got huge glacier. The whole of Greenland is basically one great big ice cap, pouring trillions of cubic liters of water into the ocean every day. And that's a potential another very interesting side of the business that we're looking at as well, as far as renewable energy from hydro.
Okay. Well, thank you very much for your time today, Edward Wyville, Corporate Development at Amaroq Minerals. Looking forward to continuing to follow the story throughout the course of this year.
Pleasure, Mark. Good to speak to you. Cheers.
If you enjoyed this